Hello, everyone. We're back again, episode 9.
Woo!
It's kind of funny. I was going back and looking at our first 8 podcasts, and it's kind of crazy, like how much we've grown from the first one.
I
Like
love
even
it.
just like I had blonder hair, just like looking, I'm like, wow, I was such a baby back then, but it was only June.
I was like, how many times have I worn this outfit?
I think that's why I got over my logo shirts. So I'm like, oh, I have to keep going back and seeing what color I've worn the last
Literally, I'm
time.
like, did I wear this in my last closing? Not good. Change it up, kid.
Yeah. That was kind of funny. I was like, wow, I was like, had blonde hair and just like, it's just funny just seeing the changes through the videos. But
Oh,
yeah,
that's
but
great.
yeah. So we are on episode 9, which is great. Episode 9 of Real Talk, Real Life, Real Estate, where we talk everything to do with real estate, real life experiences, and just we do some episodes that are just real talk. Like sometimes we just need to be vulnerable and let loose and just talk about the things that people try to act like they're too cool for on social media.
Right.
So
Yeah, that's not
yeah,
us.
not at all. But yeah, so episode 9, we wanted to dive a little bit into just the breakdown of like a buyer boot camp. Just
Ooh.
explaining what because it can be intimidating. Like you go into it not having any clue where to start, who to call, what to do, what the steps are, how much it could cost you. So we wanted to break that down because we feel like the last few episodes we've really been encouraging people buying now if you're financially able to. So we thought it would be a good segue into breaking down the steps from getting pre-approved to the closing.
And who better to do it than you and I, who
Yeah.
see both sides of a
Yeah.
transaction a lot.
Yeah,
So,
exactly.
I'm excited. So,
Yep.
shall we introduce ourselves
Yep.
for those that don't know us?
You go right ahead.
Can we go first?
Yeah.
Ooh, okay. We're switching it up today. Episode 9, we're getting frisky. So I'm Alexandra King, and actually, great time to announce. So recently, we just changed mortgage companies.
Yay!
Yes, so I am now Alexandra King with New American Funding. Here's the great part. So we're still located at Coconut Point. Nothing is changed other than we decided to go with a different bank that has better rates, more products, better pricing in general, and just an all-around environment that we are looking for because we are looking to continue to grow in this ever-changing market. So the last company I was with, they were incredible. There's nothing wrong with them. It's just, when sometimes you grow and you grow in different directions. And this is something that our whole team decided was the best for all of us with our vision of where we're going.
Nice.
So yeah, the cool part is we're actually the Be Your Gift group, and we're powered by New American Funding. So we're rebranding ourselves to basically be the Be Your Gift group. And I don't know if I've ever gone into that on our podcast.
No, I was actually going to say, like, if you guys were to walk into their office, it is so just, it's happy, it's bright, and it says Be Your Gift on the wall.
Yeah, exactly. Yeah. So it basically, our whole team believes that everybody has a gift. Personally, I believe that it's God-given gifts that is our job to share with others. So me personally, my gift is the gift of connection. I have found that throughout life, I am able to connect with others. And so when I am working with people during one of the most stressful times in their life, I'm able to slow down and connect with them on a personal level so that they don't feel like this is just another transaction. They feel like they can share who they are, what they're looking for, and therefore I'm able to help them to the best of my ability because they're comfortable with me.
Yeah.
And so that's how I approach every transaction, not like you are just a number to me, but you are a person that I want to connect with. Yeah. And then everyone else in my office has gifts as well. And I mean, what's your gift, would you say?
Man.
Sorry, I'm putting you on the spot.
I think my gift would be the ability to relate or, empathize with people.
That's good.
Yeah. That's what I would probably say, because it's easy for me to kind of take a step back from my own feelings or beliefs and kind of like really understand somebody else where to come up with solutions. So I would probably say like,
I love that. That's so good. See that? So anyway,
that's cool. Yeah, I knew that it was, everyone has a gift, but I didn't realize you guys each had your own individual.
Yes.
So that's super cool.
Yeah. So that's what we've been doing up in here.
That's awesome.
Yeah, I'm really excited. So
yeah. All right. And I'm Gibby Eagle. I am a native to Southwest Florida. I work with Maxim Realtors. We are a small local brokerage, probably about 50 active agents. So we're not very large, but I like it that way. So I grew up here. I love studying the market. I'm very passionate about helping people on the journey to home ownership, whether you're an investor or buying a second home, first time home buyer. and I really enjoy studying the market. I like to be kind of prepared for next steps, and I love educating people. So that's where me and Alex realize we have a good connection, is obviously a friendship for so long, but realizing we have the same values when it comes to our careers.
Yes,
So
absolutely.
yeah.
So yeah, it's exciting stuff. So I'm
Yeah.
excited
So
for this boot camp.
yeah. So again, Real Talk, Real Life Real Estate. We'll have all of our info below if you're watching from YouTube or Spotify. So we'll get into it, but we're going to do a little bit of a buyer boot camp to get you prepared for a home purchase.
Yeah,
So
take it away.
yeah. So the first thing that you're going to want to do, obviously, you're going to go into it. Maybe you have a realtor that you're wanting to use, or a lender that you know have been following, or just at some point have said, hey, like I would love to use them when I decide to make that step. Or maybe you have someone, a trusted friend or something. Maybe you only know a realtor. You can call them, ask for a local a lender option. We always advise going with someone local, that if you want to go sit down in their office, you can. So hello. And then also maybe you don't know a good realtor to go to. So if you have a trusted lender, call them. They can give you recommendations. So the first step is building your team of who you want to help you get from step one to the closing process. And it's all about trust. It's a business transaction.
Exactly.
So big thing is making sure that you're comfortable with whoever you choose for a good 3-4 months possibly. So
Absolutely.
or longer.
For sure. No, I think
Yeah.
it's very important to be very comfortable, because I find that there's no such thing as a stupid question. It's like what I want to say. So I always advise everyone that I talk to, do not feel like you're asking me something that's dumb. Like, I'm here to explain to you what you don't understand. If I'm saying words and you're like, what are you saying to me? I will rephrase and try to re-explain.
Yeah.
Like, I really want to educate and have everyone that I work with feel comfortable
Mhm.
with what they're doing and why.
Yep.
I'm not saying you're going to write mortgages after this, but like at least you're
Yeah.
going to
You're not
understand why.
blindsided.
Yeah, you're not blindsided. One, you're going to understand the next steps, and you're going to understand why I'm even asking you these weird documents. You're like, this is my whole life. I'm like, exactly.
Yeah.
So just setting that expectation and just having open lines of communication with real estate agent and lender. So work with someone you're comfortable with, that you can ask those stupid questions to.
Yeah, exactly. That's one big thing I've noticed. Like first time I meet clients and we go see a home, or if they come down and sit with me to interview me, like I break down all the steps, because they're like, oh wow, okay, all right, I didn't know any of that. So I love that you do that as well.
Yes.
So
for
sure. So I guess obviously we always talk about the first step of a real estate transaction is getting pre-approved if you're not planning to pay cash. So that's the biggest thing, just so you know where you stand as far as what you can afford, or how much your mortgage payment you're comfortable with. But also too, once you go to make an offer on a home, you're not having to go back step, like take a couple days to gather paperwork and get pre-approved. You find something you love, you're able to make an offer right then and there.
Sure.
Like, what do you expect? If someone were to call you and want to get pre-approved, is there things that they should have to kind of be prepared to talk with you? Or
well, honestly, the first conversation is just that. It's just me asking questions. But what are you looking to do? I like to always ask, how can I help you? What are you looking to do? And kind of like let the client tell me what they're looking for. Because then usually in that conversation, I can kind of understand where they're looking to buy, what type of house. Is it a condo, single family, duplex? And then after that, I kind of just ask some general questions like, okay, so what do you do for a living? Oh, okay, what does your husband do for a living? Or oh, how long you've been doing that? Because these are questions I'm asking to kind of piece together your application.
Okay.
I usually take notes. So these are just like different types of questions for me to understand you, where you're at, maybe financially. Like, I'll ask, oh, do you have money for down payment closing costs?
Yeah.
No? Okay, so ding, 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 we're going to have to go down payment assistance program.
Okay.
So these questions I'm asking is kind of to place you where I think that we're going to end up writing the loan.
Got it. Okay.
Loan type,
I like that, because some people I've worked with are like, oh, send them the application, have them start filling it out, rather than having that rapport first, just to even see if they want to work with you.
Well, exactly. I mean, and I like to introduce myself and just be like, hey, how are you? I'm in Coconut Point if you need me. And I also get a feel for the client too, like, are they good with electronics? So if not, then I do offer them, hey, do you want to come into the office? I'm happy to help you with the application.
Okay, that's cool.
Or are you not comfortable sending documents via email? Okay, come to the office. You can bring them. I'll make copies. things like that. That's kind of my first initial. I'm just kind of feeling out, you know.
Mm-hmm.
After the conversation, though, I do always say, okay, so I will need you to fill out an online application. And then I usually get their email and I send it to them. And then I
Okay.
let them know, based on their employment types,
Mm-hmm.
the initial documents that I am going to need just to verify their income to do the
Okay.
pre-approval.
Okay.
The reason that we send out an application to you all, it's because it is your basic information all compiled into one place. Also, in that application, you allow us to pull your credit.
Okay.
Typically with my clients, I do something called a soft pull
Okay.
if we're not like looking to put an offer in immediately. So what the soft pull does is it's not linked to any type of transaction, so it doesn't affect your credit.
Oh, okay.
So therefore, it's more just like a preliminary, like, let me look at your credit report. Let's make sure things look good. You know, and I have a lot of clients that we stop right there because I pull the credit and I'm like, ooh, we are not going to qualify for any down payment assistance programs. You know, and typically it goes hand in hand. And
Yeah.
I'm not trying to say that people that have bad credit don't have money, but
Mm-hmm.
I have found that a lot of these people have been interested in the Hometown Hero program. They come to me because I write with that program a lot. And we actually end up starting with fixing their credit.
Okay.
So, you know, that's another thing that I would encourage is when you do fill out that application, obviously that's allowing me to see another piece of the puzzle.
Okay.
You know, it's another layer
Mm-hmm.
that we need to work with first.
Okay.
Basic documents. So if you are a W-2 employee, we ask for 2 years of all your W-2s. So it'll be 2021 and 2022. Usually 2 most recent pay stubs if you're paid biweekly.
Okay.
And then depending on what we're doing, I might ask for your 2 most recent bank statements just to show that you do actually have those funds for down payment and closing costs. Mm-hmm. You know, so those are the things that I'm going to be needing to help calculate my income, help figure out how much cash we have as reserves, how much, what we're doing and what your whole picture looks like.
Okay. All right. Well, yeah. And that, I mean, that's why that's such a big first step is because, you know, I've had people call me and I always feel bad because they're like, yeah, I'd like to go look at this house. I'm like, well, are you a cash buyer? You know, are you going to need to finance? And they say finance. I'm like, I just don't want to get to that home and you get excited. And then we go to get you pre-approved and you find out that you have things that you do need to work on. Maybe you're not ready. Maybe it will be just a month or, you know, whatever it is. But it's like, people always think that realtors are like being mean because it's like, well, we want to go now. We just want to look, you know, but in some sense, it's wasting your time and, or potentially wasting your time, potentially wasting, you know, a homeowner's time and everybody. So it's such a big step because too, once I get the connection with, if you use Alex with the lender, we can discuss, okay, hey, they're going to need help with down payment, or they're going to need help with, you know, some concessions to closing, or, you know, we're going to need to be at this price point. That way, when I have a conversation with you on what your plan is and what you're wanting, I can base your portal, which is well, you'll have emails based on the criteria you give me. It'll send you homes as they come active on the market, but it will cover things like what Alex is saying, like maybe we need to keep taxes at a certain point. You know, I'm able to adjust that in the criteria where it says, all right, taxes, don't have it go over this number. You know, homes under 450, 3-bedroom, 1,700 square feet, whatever those are. We're all on the same page. And then also the conversations about the, you know, down payment assistance or whatnot. When we're ready to go make an offer on a property, I know, like, you know what, we're going to need to ask for concessions. So that's where we make an offer and, you know, decide whether we're going to ask for, you know, concessions towards closing or whatnot. So that's a big thing. So that's why the pre-approval is such a huge thing.
Yeah, you know, and I know it's kind of scary because like you're allowing me to dive right into your finances, and I know that can be really intimidating, but it shouldn't be, and it doesn't have to be that way. You know, it's honestly just so I can see exactly where you're at, so that Gibby or whoever you're working, we're gonna use Gibby, whoever Gibby is able to base what she's showing you off of things that are realistic.
Yeah, and be prepared. Like I can pull comps and say, all right, I have some verification to say, you know, this is why we're making this offer, just to make it more appealing to a seller. Like, okay, yeah, you're right. You know, that's totally okay. But so when that happens, obviously, if you know, once we have your pre-approval, we start looking at homes. Like if you're ready to make an offer on something, that first offer is critical. You know, so I will call the agent to have a conversation with them. Hey, what's the motivation of the seller? Do they have a time frame they want to be out of the home? Because sometimes maybe oh, actually, that would be great. They would prefer a, 45-day or 60-day close just
Mhm.
to get out of the home. Or, we prefer to close in 30.
Right.
That's when I can go back to Alex, hey, does this time frame work?
Yeah.
But so the first offer is critical. There will also be on there your escrow payment. If and when we get executed, that escrow payment is a good faith payment, usually made within 3 days of executed contract, and it goes towards your down payment in the
Yep,
end. So
it does.
yes, and then we have our due diligence period. So our due diligence period is for you to do any inspections, whatever you need to do to make sure that you are comfortable with the home moving forward. Florida is an as-is state, so we tend to use as-is contracts. So
Yeah.
during that, normally it's a 15-day period unless negotiated otherwise. You can have, a full home inspection, roof inspection, pool inspection if there's a pool. And if things were to come back on that inspection report that you're not comfortable with, you can negotiate with the seller to make repairs or give concessions towards closing costs. But if they decide, hey, we're not willing to do any of that, that escrow is protected with that inspection contingency for you to walk away from the home and get that escrow back. So then you can just start shopping again. So the
Mhm.
only thing out of pocket you will be at that point is the inspection fee, which is about maybe 500, to $700 depending on the size of the home.
Yeah.
So, yeah.
Good.
And then you tend to order the appraisal
Yeah.
within that period.
So yeah, as soon as the contract is executed, and both parties agree and it's signed fully,
Mm-hmm.
the Gibby will send it over to me,
Mm-hmm.
and yes, what I'll do is I will go through the contract. I will set up your file to match exactly what the purchase price is. I
Mm-hmm.
will add whatever your earnest money or good faith deposit is. I will make sure that the documents you sent me are up to date. Because
Mm-hmm.
sometimes it takes a little bit to find the house that you're looking for.
Yeah.
So maybe a couple pay cycles have gone by since then. And I'm like, hey, I'm going to need updated pay
Yep.
stubs, things like that. But yeah, so once I get the file all set up, I end up sending out something called initial disclosures. So
Okay.
those are all of the lending documents that go through what your estimated monthly payment's going to be, what the estimated closing costs are going to be. It has all that information, and then a bunch of other disclosures, just basically going through the different acts and things that we're not allowed
Mm-hmm.
to do, like don't lie on your loan application, don't money launder, you better be who you say you are.
Mm-hmm.
Just things of that nature that I'll need. So once those are sent to you and you sign them, that's when I'm actually allowed to order the appraisal.
Okay.
And that's the two things that I like to do immediately once the disclosures are signed.
Mm-hmm.
Is I like to order the appraisal because I like to get that we want to get that ball rolling,
Yeah.
because obviously that's a third party that we're going to be waiting on to get this done.
Mm-hmm.
But that is the one item that you do typically have to pay out of pocket.
Okay.
So you will not be charged for it at closing. Typically, you pay for it with a secure payment link, and then once it's paid for, the appraisal will get scheduled.
Okay.
And I like to tell my clients that, be like, hey, just FYI, this is going to
Mm-hmm.
be the next out of pocket thing.
Okay.
So the other thing I always do is order homeowners insurance quotes,
Mm-hmm.
because the reason I do that is we want to double check it's not in a flood zone. And also we want to know how expensive the
Mm-hmm.
homeowner insurance is, because, that's sometimes can make or break payment wise. And if you're doing that during the inspection period, then guess what?
You're protected.
You're protected. You can literally back out.
Yeah. Yeah.
Um,
And that's some people don't do that right away, and we both have agreed that is so important, because finding out that the home is in a flood zone after you're out of that due diligence
Girl,
period, you've
I'm telling
wasted
you.
15, 20 days, and then you're shopping insurance. I personally, and I know Alex does too, we check flood zones like immediately, because that can be a big
Yeah.
deterrence for people. That's huge. So definitely during due diligence, have your homeowners, because during the inspection too, you'll get your WINMIT and your 4-point
Right.
inspection, which
So-
helps with discounts. So
Yeah, and work with an agent that you like and trust
Yeah.
as well. Gibby and we actually had Ashley Matita at Sunrise Insurance on
I think it was episode 5.
5. Yeah.
Yeah.
She's amazing. Her employees are all amazing. Like, they just want to help you and explain and have you feel comfortable with what you're doing.
Mm-hmm.
So, and she's a broker, so she shops everywhere to get you the best possible rate with coverage.
Yep.
So she's my go-to, but there's also, it's who you know, like, and trust. So
Mm-hmm.
there's definitely other very reputable agents that work in Novus market as
Yep.
well. So
Yep.
it's definitely important to get those inspections off to them, get everything quoted. So, once that's all taken care of, what I end up doing is sending the file to my processor. The processor then goes through everything that I already went through. They do all the back end stuff and they get the file to the underwriter. So the underwriter is the person that's going to be looking at everything and approving or disproving your loan.
Mm-hmm.
So obviously it's super important to be extremely honest in the beginning, to give the underwriter everything that they need to make a decision based off the documents that you're providing.
Mm-hmm.
So sometimes though during underwriting, the underwriter will come back with conditions and then they might just ask for a couple more documents from you. Totally normal.
Mm-hmm.
It's nothing to be alarmed about. So then that's when the processor will reach out and say, hey, you know what? Underwriting actually asked for XYZ. Could you send that over to me?
Mm-hmm.
So once we have everything, so we have all of the documents, the appraisal comes in, the insurance is officially bound. Also, the title work, just to make sure that there's no liens on the property, that there are no issues whatsoever. Mm-hmm. Once we have all of that, that's when the underwriter can make the final decision and approve your loan. And that's what we call the official clear to close, or CTC.
Mm-hmm. Yep.
So at that point, I would let Gibby know, hey, great news.
Yep.
We are clear to close.
Mm-hmm.
I let the title company know we're clear to close, and let the client know, hey, your loan has been approved. Great. Next steps. Here we go.
Yeah.
And that's typically when the closing department of my organization will get with the closer of the title company to then determine what your final cash to close will be. Mm-hmm. So throughout this whole process, obviously we've sent the initial loan estimate in the beginning. 3 days prior to closing, I always send mine out early, but I'm required to do this 3 days prior to your closing. Mm-hmm. We send out something called an initial closing disclosure. That information is still a rough estimate, but it's definitely a more realistic estimate of what the actual cash to close will be. The reason for that is we actually will have insurance at that time. You've already paid for your appraisal. We know what your earnest money is. Mm-hmm. So we're tightening up those numbers, which definitely helps you. So that final figure, though, that comes when my closing department gets all of the title fees and the title company gets all of our fees, and they put everything together on a finalized document called your closing disclosure. And at that point, they will always let you know what it is that you need to bring to the closing table. And typically they accept a wire, so you can go directly to your bank and get the needed wire instructions from the title company, which they will give you. Mm-hmm. You get that money over to title a day or two before closing. Great. And then guess what? You get to head on right over to title at your scheduled time, and you get to sign a whole giant loan packet.
Literally a whole giant one.
And yes, so once that loan packet is signed, that's when all of the money that title has been holding gets distributed to everybody that it needs. So everyone gets paid, and you officially become a homeowner.
Yeah.
So in a nutshell, I think, sorry.
I just
good.
Took
that right to the closing table.
No, it's totally fine. It's totally fine. Like when she does I don't care. I can re-edit it, or we can just
send it.
No, we're done. That's it.
Okay, bye. Took that one home.
That was a quick close. I loved it.
All right, goodbye. Have a good day.
But no, I wanted to highlight too, because she was talking about ordering that appraisal. One thing that I always make sure I include, which especially now because things are so much more negotiable. A couple years ago, but I always make sure there's an appraisal contingency in there. Yeah. When I submit the first offer, appraisal contingency.
What does that mean?
So if you were to do an appraisal contingency, when that home appraises, it has to appraise at contract price or under. If it does not, then the seller needs to drop to appraised value. Buyer, if they financially can, they can come up with the cash and the difference in cash, or you get to walk away and you get to take that escrow deposit, that good faith deposit with you as well. So it's just another added protection for you. And then there's also that 30-day financing contingency inspection. Another thing I do not advise waiving, which we saw a lot of that over the last couple of years. Like, do not waive that, because if you can't get financing, you're screwed.
So the process that I just described is all happening in that 30-day period.
Yes, all of that. So, and you want to make sure you have that protection, because if you don't have the cash to buy that home, you're screwed. So
the seller could walk away with your earnest money deposit. No ifs, ands, or buts. Like if they wanted to, if you cannot close.
So
which we don't like. Obviously, that's never. And I'm very clear with my clients too. Like, Or if like I pay attention to those
Mm-hmm.
things. And I'm always like, hey, we're within this window. You're good. You can walk. Hey, I'm going to have to issue a loan denial. So if something
Mm-hmm.
has changed in your life in this process, you got to tell me.
Yeah. Yeah. And I mean, sometimes too, like when we had the, period of bidding wars, there were times where the seller would not accept an appraisal contingency. So I
Mm-hmm.
would have to call the lender, like, we still have the financing contingency. If it doesn't appraise, like, are we okay? Like, are you able, could you deny financing if that happens, So
Yeah.
sometimes it's just good to have that extra cushion. So there's no questions, there's no issues. That appraisal contingency can save you a lot of money.
Oh,
So,
yeah.
yeah.
And it's good to have a realtor that's going to be able to communicate with a
Mm-hmm.
lender because, I mean, honestly, we're on the same team. We're
Yes.
here to make this as painless for you as possible.
Mm-hmm.
And that's why I think it's super important to work with people that are willing to communicate.
Yes.
Because I'll say this: you can tell how someone communicates based on your interaction with them.
Mm-hmm.
So if you're struggling to get them to explain things, if you're struggling to get them to answer their phone, what do you think the realtor is dealing with?
Yeah, exactly. Yeah.
Same thing.
Yeah. So it's definitely good to make sure that your lender and realtor have good communication,
Mm-hmm.
good rapport, keeping each other up to date, because you don't want those little things falling through the cracks because people aren't asking the questions or saying the things that they need to. Like, if there's something that Alex is trying to obtain, or needs, and she's not able to get it, or needs another, push, she can tell me, hey,
Yeah.
help me get this? Like,
Yeah.
I need this from, the seller, the listing agent,
Right.
title, whoever it is. So it's definitely important, because we all have one goal, is to get you to the closing table. And
Absolutely.
everyone should. I mean, listing agent, selling agent, title company, lender, whoever's involved, that should be their main goal. Sometimes you
Yeah.
run into people that they have it's, yes, they want to get to a closing table, but they want to do it on their terms and their terms only. So,
Well, you want to hear a great story? Speaking
sure.
of that, that's a great segue. This is a great story that we will share about the closing table. This actually happened Monday. So, and this is also a PSA for everyone. I just want to share this. If you are married in the state of Florida, even if you are separated from your spouse, because I understand that some people have continued to be married but have lived separate lives for years. But I just want you to know that if you are legally married in the state of Florida, you are required to sign stating that you know your spouse is buying a primary residence. And you're not signing the mortgage note, which is basically stating that you're repaying. That's not what you're signing. You're not signing the deed either, saying that you own part of the property. You're literally just signing stating that you know what is happening.
Mm-hmm.
So you know what type of mortgage your spouse is taking out.
Mm-hmm.
And as that spouse, you literally have rights to that homesteaded property.
Yeah.
Meaning you could move in with your spouse if you wanted to,
Yep.
even if you've been separated for 7 years.
And Florida's a 50-50 state. You sell that property, your spouse is getting half of that.
Yeah. So just keep that in mind.
Mm-hmm.
So all of that to say, I have a wonderful client. We closed Monday, praise Jesus. But her spouse, who she's been separated with for over probably close to 7 years, originally told her no problem, sign whatever you need in the beginning of the loan process. Then it came time that we were going to be signing. We were going to close on Monday. He wanted to sign Friday. But guess what? He took the papers and said, I'm not signing these because I am listed as a borrower here. Mind you, this man was not on the mortgage. We did not pull his credit. He was not on the deed. He was on nothing other than 6 different pieces of paper just stating that he knew what his wife was doing, basically. And here's the crazy part. Well, it's not really crazy. There was a large miscommunication of what this man was signing. He thought he was signing the mortgage note, which means he's liable for the debt.
Oh.
He was not signing that at all. So we had a lot of tears. We had a lot of anger over the weekend. We had him saying he wasn't going to sign things. We all got to the closing table on Monday. Borrower signed. We finally got him on the phone, and I actually talked to him for the first time. I was able to explain to him exactly what he was signing.
Isn't it amazing what communication does?
Well, I actually asked him. I said, I don't understand what. Okay, I wasn't rude. So what I'm trying to say right now, I asked him, I was like, what is your actual question? Because I need to understand, what is it that you're worried about by signing these documents? I said, because from where I stand, I said, I can tell you I was the one who did the lending. Your credit was not pulled. You are not on the mortgage application. You are not on the deed because of the program that we're using. And you're not even allowed to sign the mortgage note stating you owe this debt. because of the program we're using.
Yeah.
I said, so your name is nowhere on this transaction. I said, so what are you worried about? That when you buy your own house, that this is going to come up on your credit report? Because I can assure you it's not.
Mm-hmm.
I said, all I'm telling you is that your wife is buying a house, you're signing stating you know, and you, sir, have rights to this property now. I said, so if you actually want to think about it, you're making out in this deal.
Yeah.
I said, so if she was to die, you would actually become part owner with her aunt.
Mm-hmm.
And he's like, well, I'm not trying to, and I'm like, no, I'm trying to understand
I want
what is
you
the
to understand.
problem.
We want all of us
Right.
to
And
understand.
that's what I said. I said, so I'm trying to understand what is it that you're concerned about.
Yeah.
He's like, I'll sign.
Wow, that was easy.
And then I was like, you're going to sign. He's like, yeah. He goes, actually, no, one more question. I was like, okay. He goes, am I still a first-time home buyer? I said, yes, you are not on the mortgage note. You are not on the deed. Unless you have gone and bought a primary residence somewhere and haven't told anybody within the last 3 years or sold real estate in the last 3 years, you are a first-time home buyer. He goes, no problem. I'll sign Monday.
Wow. Wow.
So granted, they closed.
Yeah.
But it just shows how important, number one, communication is.
Mm-hmm.
And number two, actually working with somebody that understands what's going on.
Yes.
Like people you know, like, and trust is great, but also make sure that they actually know what they're speaking about.
Mm-hmm.
Make sure they're going their extra mile to explain the things that are going to need, that might pop up, because this was a conversation her and I had in the beginning. Granted, we didn't think he was going to do what he did. But I was like, no, we're not giving up. Like, she was so upset. And I was like, no.
And it seems like she was probably the one communicating the information. And to me, like, I don't do lending. People call me and ask me lending questions. I'm like, you got to call your lender. Like, I don't even feel comfortable speaking on that. The way I say it is not how they say it. It's just better to just, just go straight to the source.
And I'm not saying that I'm going to step on Title's toes, but I also know, like, I know enough about certain things and I have enough contacts. If I don't know something, I'm going to call them. But hey, this is my situation. I did that over the weekend. So I got more insight. And basically it just came down to the him not hearing the title agent correctly.
Okay.
He just needed a little extra oomph. And I think,
and sometimes how you word things,
and
like
also,
they just weren't understanding.
Right. And Title doesn't know anything about lending. So that was why I was able to speak on the lending portion and be like, hey, no, like, I promise you, this is not coming up on your credit report.
Yeah.
Like, this is not your primary residence. So you have nothing to worry about.
Yeah.
So all of that to say, that was the little story I just wanted to share.
No, I think it's great.
Because it's educational, number one. And number two, like, just remember who you marry matters.
Yeah.
PSA.
Yeah. I went to a closing a couple weeks ago and the mortgage company didn't put the wife on the mortgage. Like, she wanted to be on it.
Oh.
Because she was like, and her husband was explaining, like, it's a 50-50 state no matter what. And she goes, I want to be on there. It just made her more comfortable. Like, and she's like, it's just a principal thing to me. Like, I want to be there. And they did it. But, so sometimes, but I'm like, I was a little nervous. I'm like, getting to the closing table and the name's not on there. I'm like, do we have to go back and, like,
yeah,
because sometimes that could make a big difference. You don't qualify to be on the mortgage. So,
right. I mean, yeah, there's like,
but there's just so many things. And that's why it's important to just communicate again, like,
for sure.
But yeah, Florida, 50-50 state. If you're married, you're getting half and half. So
unless you have a really good divorce attorney.
Yeah. Just erase them from the planet, please. But yeah, we wanted to break it down because sometimes there's so much back work that goes on during. They're like, so what next? I've had buyers. What next? What next? So we felt it was important that we're encouraging buyers so much to buy right now, but it's like, it's still intimidating.
You're like, how do you do it?
Yeah.
You want us to buy, but how?
Yeah.
So like, let us help you.
Yeah. So the main thing is just, picking a team that you feel comfortable with over the course of several months. I mean, you could be, if in a year, if our interest rates drop, we could be back into that course where you're making a few offers before you finally lock in that one. So just make sure you trust who you're working with. I mean, that's a big financial decision. So
for sure,
building your team, getting pre-approved, working with the lender timely to get documents in that they're requesting so we don't run into any hurdles, just being prepared for that due diligence period to come up with the money for inspection and the money for appraisal, shopping insurance, which the lender and I usually help too. I'll throw in a couple, quotes as well with, local insurance people so you can compare. And then, yeah, that's the big thing too, the processing time and, working with the underwriter, making sure all the documents are there, that
Right.
you're being honest through the whole thing. So you're not like, oh yeah, I should have,
Yeah,
I should have
exactly.
expressed on that a little bit more. But,
Right.
and just making sure whoever you're working with knows the protections that you can have in a contract. I mean, the appraisal contingency, financing contingency, your due diligence period. I'd never advise waiving your inspection. Always have an inspection.
Always.
$500 as opposed to $400,000. You might as well pay that $500. So
It's worth it.
yeah. So yeah. So that's the biggest things, and just yeah. And then exciting part is the closing, and make sure you're doing a walkthrough. I always have a walkthrough done the day before if the sellers are out, or if they're not out, if they're still working on it, if they're comfortable with it. But doing your final walkthrough, making sure that things are in working order. There's no leaks under the sinks. The toilets are flushing. The lights are working. Make sure that the sellers don't shut off the electric and water prior to closing, because you need those things on to make sure that the home is in the correct condition.
Yes.
So
Yep. And
yeah.
And Gibby can always help too with help transfer, services and things like that if you have questions. So it's a lot of information, but
it is.
That's why we're here every step of the way, because this is what we specialize in. So.
Yeah. But all right, guys. Well, hopefully that was helpful. Hopefully we got everything, pretty much the basics covered on it. But if you have further questions, you can reach us at realtalkrealliferealestate@gmail.com, or you can reach us on our social medias, which will be posted on YouTube and Spotify.
Absolutely.
Yeah.
Happy to help.
Yep. So
Cool.
that is episode 9, and we're out.
Yeah. Till next time.
See ya.
Bye.